Hello everyone, welcome to the 99th episode of me learning how to trade in Forex. So in the last video we were going through the Eurozone section in the country profiles. So we finished off the United States of America and now we're on to the Eurozone. We learned about some facts regarding the Eurozone, some Euro's economic overview, monetary and fiscal policies, and now we're on to getting to know the euro. So let's get started. Getting to know the euro. Aside from being dubbed the anti-dollar, the euro is also nicknamed fiber. Right? Some say that this nickname was derived from the transatlantic fiber optic, which was used for communication, while some argue that it was from the paper used to print the European banknotes way back then. Here are some of the other characteristics of the euro. Okay, nice. They call me the anti-dollar. With the euro popularly known as the anti-dollar, Euro USD is the most actively traded currency pair. As such, it is also the most liquid of the major pairs and offers the lowest pip spread. Euro is popularly known as the anti-dollar. EUR USD is the most actively traded currency pair. EUR USD is also not the question mark. EUR is also the most liquid of the major currency pairs and offers the lowest pip spread. I'm busy during the London session. The euro is most active during 8 AM GMT at the beginning of the London session. It often has little movement during the latter half of the US session around 5 PM GMT. The euro is most active during the 8 AM GMT at the beginning of the London session. Least active during the 5 PM GMT mark. And have had a few relationships. Euro USD is often linked to the movement of capital markets such as bonds and equities. EUR USD is often linked to the movement of capital markets such as bonds and equities. It is negatively correlated to the movement of the S&P 500. EUR USD is negatively correlated with the movement of S&P 500, which represents the performance of the US stock market, So negatively correlated meaning if S&P 500 moves up, then Euro USD is going to go down, and EUR USD is going to go up, then S&P 500 is going to go down. The correlation was thrown out of sync after 2007 financial crisis though. Now Euro USD has a slightly positive correlation with this. Okay, never mind. Ignore what I just said there. However, after the 2000 7. Financial crisis. EUR/USD has a slightly positive correlation with the S&P 500. Euro/USD is also negative correlated to USD/CHF, reflecting how the Swiss franc moves in the almost perfect tandem with the euro. EUR/USD is negatively correlated with 2 USD/CHF, not CHG. Important economic indicators for the euro. Gross domestic product. So, important economic indicators for the euro. GPD. Central measure, is the central measure of economic growth in the region. The central measure of economic growth in the region. Since Germany is the largest economy in the Eurozone, its GDP tends to move the euro the most. Since Germany is the largest economy in the Eurozone, its GDP tends to move the euro the most. Employment change. The euro is also sensitive to changes in employment, particularly in the Eurozone's largest economies like Germany and France. Sensitive to changes in employment, particularly in Eurozone's largest economies like Germany and France. German industrial production. This measures the change in the volume of output from Germany's manufacturing, mining and quarrying industries. Because of this, it reflects the short-term strength of the German industrial activity. Measures the change in the volume of output from Germany's manufacturing, mining and quarrying activities. Reflects the short-term strength of German industrial activity. German IFO Business Climate Survey. German IFO Business Climate Survey. This is one of the country's key business surveys, conducted monthly. This takes into account the current business situation of Germany as well as expectations for future conditions. So one of the countries Why is it doing that? One of the country's key business surveys. Whoa, I don't know what's going on. Key business surveys. I can't type today. Conducted monthly, this takes into account the current business situation of Germany as well as the expectations for future conditions. Conducted monthly, taking into account the current business situation of Germany as well as expectations for future conditions. Budget deficits. Recall that one of the criteria in the Maastricht Treaty requires that Eurozone economies keep their debt to GDP ratio below 60% and the deficit less than 3% of the annual GDP. So one of the criteria in the MAA, what do you call it? MAATRICHT treaty. Failure to achieve these targets could result in fiscal instability in the Eurozone. Fiscal instability in the Eurozone. Wait, so where did I write the targets? This is the last one, isn't it? So failure to achieve these targets could result in fiscal instability in the Eurozone. Consumer Price Index, CPI, Consumer Price Index. Since one of the goals of the ECB is to maintain price stability, they keep an eye on inflation indicators such as the CPI, an inflation indicator. Okay. Such as the CPI. If the annual CPI deviates from the central bank targets, the ECB could make use of its monetary policy tools to keep inflation in check. Yep. What moves the EU are? Eurozone fundamentals. Reports of strong economic performance by the Eurozone as a whole, or by its member nations, can boost the euro higher. For instance, better than expected GDP reports from Germany or France could encourage traders to be bullish on the euro. Reports of strong economic performance by the Eurozone as whole or by its member states or its member nations can boost the euro higher. Uncle Sam's groovy moves. Sudden changes in the market sentiment buoyed most by US economic data tend to have huge impact on the Euro USD. Being considered the anti-dollar, the euro is always swayed by the talks of reserve diversification away from the US dollar. Euro as the new reserve currency, anyone? sudden changes in market sentiment from US economic data tend to have a huge impact on the euro, on Euro USD, EUR USD. Okay, differences in rate of return. The bond spread between 10-year US government bonds and 10-year Bunds, Germany bonds, usually indicate the direction of the USD, Euro USD. If the difference between the yields of US bonds and bunds widens, EUR USD moves in favor of the currency with the higher yield. So for example, if US bonds was given out higher yields than bunds from Germany, then EUR USD moves in favor of the currency with higher. So EUR USD would weaken, would fall in value, so you would take less USD to buy €1. Whereas if bunds has high yields, then EUR USD is gonna rise. Oh, it's gonna rise because euro would then be more in demand, so it's going to be stronger the currency than USD, so it's going to take more USD to buy €1. Therefore EUR USD is going to rise. Yep. Similar to bond yields, interest rate differentials also serve as an excellent indicator of the Euro USD movements. For instance, traders usually compare the Euribor futures rate with the Euro-Dollars futures rate. So, bond spread between 10-year US government bonds and 10-year bunds. 10-year, I'm sure like Germany bonds, usually indicates the direction of EUR USD. If the difference between the yields on US bonds if the difference between the yields of the US bonds and bunds widens, Euro USD moves in favor of the currency the higher yield. So EUR USD moves in favor of the currency with the higher yield. Interest rate differentials also serve as an excellent indicator for Euro USD. Just to clear things up, Euribor is an acronym that stands for Euro Interbank Offer Rate, which is the rate Eurozone banks use for interbank transactions, while Euro dollars are deposits denominated in US dollars. Trading Euro USD. Euro USD is traded in amounts denominated in euros. Standard is trading amounts denominated in euros. Standard lot sizes are 100,000 euro and mini lot sizes are 10,000 euro. The pip value, which is denominated in US dollars, is calculated by dividing 1 pip of Euro USD, that's 0.0001 by Euro USD's rate. Profit and losses are denominated in US dollars. For one standard lot position size, each pip movement is worth 10 US dollars. For one mini lot position size, each pip movement is worth 1 USD. Margin calculations are based in US dollars. For instance, if the current Euro USD rate is 1.4 and the leverage is 100 to 1, it will take 1,400 USD in the available margin to be able to trade one standard lot position of 100,000 euro. As Euro USD's rate increases, a larger available margin in US dollars required. The lower the Euro USD rates, the lower the required available margin in US dollars. Euro USD trading tactics. Pro-Euro moves, which typically take place upon the release of strong economic figures from the Eurozone. So you're pretty much hoping the Euro goes up. Create opportunities for long Euro USD trades. Opportunities for long Euro USD trades can be found upon the release of strong economic figures from the Eurozone. Anti-Euro moves, which usually occur when weak Eurozone economic reports are released, provide a basis for short Euro USD trade. Okay, so opportunities for short EUR USD trades can be found upon the release of weak economic figures from the Eurozone. Since EUR USD usually acts as a measure of traders' view on the US dollar, sensing the direction of the US dollar could create some trade strategies for Euro USD. For instance, if traders are expected to buy the dollar, if the US retail sales report prints better than expected results, you could look for an opportunity to short the Euro USD. Sensing the direction of the USD could create trades with EUR USD. For instance, if traders are expected to buy the dollar if the US retail sales report prints better than expected results, you could look for an opportunity to short the Euro USD. Aside from waiting, you could look for an opportunity to short the euros. I'm sure I've talked about this example before, but let me just make sure to myself again. So, traders are trying to buy the USD because a recent retail sales report prints out better than expected results, meaning economy is booming. So if the economy is booming, then more investors are more inclined to invest in that country. Therefore, if the investors are more inclined to invest in that country, then they're going to need that country's currency to invest. So they're going to need more US dollars because they want to invest in America. Right? Therefore, the demand for the dollars goes up. So if the demand goes up, then its value obviously is going to increase. Right? Therefore, that's why traders are trying to buy the dollars, because they want the value of the USD. They're hoping for the dollars to increase in value. So, if you're hoping for the dollars to increase in value, short Euro USD. So, Euro USD, what you're trying to do here is sell USDs to buy €1. So, if you're hoping that US dollar is going to increase in value, you would short this trade, aka you would sell the opportunity to sell US dollars to buy euros, because Short Euro USD, short Euro USD. Because if you sell at this price now, and if you're hoping the USD is going to rise in value, so therefore it's going to take, because USD is going to strengthen against the euro, so it's going to take less US dollars to buy 1 euro, because USD is strengthening against the euro. So therefore you short this currency pair, because if it takes less USD to buy 1 euro, then the value of that currency pair is obviously going to drop, because you're needing less USD to buy that 1 euro. So if it drops, then you're shorting it, because you're selling it in hopes that it does drop. So then when you buy it back, you make a profit based upon the differences between when you sold it. So you sold it at a higher price than you bought it, if that makes sense. So if you sell something at £1, then you get to buy it back at 50p, then you basically made a profit of 50p. Yeah. So if you sell something at £10, then you get the opportunity to buy back the same thing at £1, then you just basically made a profit of £9, because 10 minus 1 is 9. So boom, that's the reason for why you short the Euro USD if the US dollars is rising. Okay, cool. Aside from waiting the Euro USD pair to retest or break significant support and resistance levels, taking a trade based on retracement also works for pair. So trading based on retracements also works for EUR USD. EUR USD is highly susceptible to retracements, which means that setting short or long orders at significant Fibonacci levels could yield some pips. EUR USD is highly susceptible to retracements. Therefore, setting long or short orders at significant Fibonacci levels could yield some pips. By catching retracements, one may be able to enter the trades at a better price than just simply jumping in the direction of the price movement. If you're a bit more adventurous, then there are other euro pairs such as Euro JPY, Euro CHF and Euro GBP that you can check out. Each euro crosses has cool and unique characteristics too. For instance, Euro JPY, which is more volatile than Euro USD, tends to be more active during the Asian and London sessions. Euro GBP and Euro CHF tend to be range bound most of the time. The latter is more prone to large spikes though, due to low levels of liquidity. Look at other EUR currency pairs as well. EUR JPY, EUR GBP. Cool. United Kingdom. So, the United Kingdom is a land of many accents, as it is actually composed of 4 countries: England, Northern Ireland, Scotland and Wales. Headed by the Queen, not anymore, the UK is considered a constitutional monarchy but is governed through a parliamentary system that is based in England's capital of London. Considered a constitutional monarchy but it's governed through the UK used to be part of the European Union. Unfortunately, this means that having a Schengen visa won't let you travel through the UK. You have to get a separate visa. United Kingdom, facts and figures. Neighbours, Ireland, Germany, France. Size, 94,060 square miles. Population, 67,545,000 as of 22nd, 2019, so it's probably not accurate anymore. Density, 661.9 people per square mile. Capital city, London. Population of 8,546,000. Probably not accurate anymore as well. Head of state, Queen Elizabeth II, not anymore. Head of government, Prime Minister, Boris Johnson, not anymore. Currency, British pound, GBP or sterling. Sterling? Main imports, manufactured goods, machinery, fuels, foodstuff. Main exports, manufactured goods, fuels, chemicals, tobacco, David Beckham, Simon Cowell. Okay. Import partners, Germany 12.6%, China 8%, Netherlands 7.5%, France 5.4%, US 6.5%, Norway 4%, Belgium 4.4%. Export partners, Germany 11.3%, US 10.5%, Netherlands 8.8%, France 7.4%, Ireland 6.2%, Belgium 5.1%. Time zone, GMT. Website, https gov.co.uk. Oh no, gov.uk. Economic overview. The UK is the world's 6th largest economy and the 2nd largest in Europe after Germany. As far as history shows us, they're a force to reckon with. After all, it is Britain that started the Industrial Revolution. The UK also had the world's largest empire back in the day, so for the past 300 years or so, the UK has been a relevant world power. Now that's what you call consistency. In terms of trade, England is a net importer of goods with a consistent trade deficit. Its largest trading partner is the Eurozone, which more specifically Germany, which shouldn't come as a surprise because Germany is a stone's throw away across the English Channel. Trade activity with the Eurozone accounts for over half of the UK's trading activity. The US on an individual basis still remains the UK's largest trading partner. Not only do the British have cool accents and hotties like Kate Beckinsale, but it is also home to arguably the oldest major financial centre in the world, London. Having a financial hub like London amplifies England's place in world trade. Okay, so what useful stuff is in here? England, so that's not the UK in general, right? Largest trading partner is the Eurozone. Specifically Germany. Trading, monetary and fiscal policy. Now here's a little bit of trivia for all of you. The oldest central bank in the world is the Bank of England. Back in the day when England was on the verge of economic expansion, government leaders realised that they needed an entity to help facilitate international trade. Enter the Bank of England. In 1694, the Bank of England was founded to help facilitate trade and growth for England. Today, the Bank of England's main monetary policy objective is that of maintaining price stability while at the same time fostering growth and employment. So, the Bank of England main monetary policy objective is maintaining price stability, fostering growth and employment. As it is, the Bank of England is aiming for a target inflation rate of 2%. England is aiming for a target inflation rate of 2%, which is measured by the consumer price index, measured by the CPI. In order to meet this target, the Bank of England has been granted the magical power to change interest rates to levels that they believe will allow them to meet this target. Bank of England can change interest rates to meet meet the target inflation rate. The group within the Bank of England that is in charge of determining interest rates is the Monetary Policy Committee. The Monetary Policy Committee determines interest rates. The Monetary Policy Committee holds monthly meetings which are closely followed for announcements on changes in monetary policy, including changes in interest rates. The Monetary Policy Committee holds monthly meetings for announcements on changes in monetary policies and changes in interest rates. Like all other things British, interest rates have a different name in England. In England, the interest rate is called the bank repo rate. Is it? The interest rate is called the bank repo rate. The main policy tools used by the Bank of England's Monetary Policy Committee are bank repo rates and open market operations. Main policy tools used by the Bank of England's Monetary Policy Committee are bank repo rate, which is the interest rates, bank repo rates, so interest rates, and open market operations. The bank repo rate is the rate set by the Bank of England for its own operations in the market to help meet the Monetary Policy Committee's inflation targets. In the market, whenever bank repo rate, the rate set by the Bank of England for its own operations in the market to help meet the Monetary Policy Committee's inflation target. Whenever the Monetary Policy Committee changes its rates, it affects the rates of commercial banks set for their savers and borrowers. This in turn will also affect the spending and output in the economy and eventually costs and prices. Like other central banks, the Bank of England raises the repo rate. They are aiming to curb inflation. On the other hand, if they lower the rates, they are aiming to stimulate growth in the economy. If repo rate rises, they are aiming to curb inflation. If repo rate falls, they are aiming to stimulate growth in the economy. When the Bank of England engages in open market operations, the Bank of England buys and sells GDP-denominated treasures and securities to control the supply of money. So open market operations. The Bank of England buys and sells GBP-denominated treasuries and securities to control the supply of money. This is an alternative method to increase liquidity in financial markets. If the Bank of England feels that there is a need to stimulate the economy, they will print more money and inject this into the money supply through the purchases of government and corporate securities. On the other hand, if the Bank of England feels like the economy has had enough candy, they will sell more securities, effectively taking back the money from the economy. So basically, they're doing what the other banks are doing. So controls liquidity, conducts above buying and selling the government securities in the market. Yeah, basically what the other banks are doing. Wait, I should probably explain this a bit more. Money. So to stimulate the economy, the Bank of England sells, purchases government, purchases more government and corporate securities. Therefore, injecting more money into the economy. The Bank of England sells securities to take back money from the economy. However, bungling sells getting back money from the economy. Okay, getting to know the GBP. The GBP must be a pretty popular kid since there's a lot of cool nicknames. Aside from being called the sterling and the pound, GBP pairs have awesome nicknames such as the cable and the guppy. Impressive, huh? Okay. I'm going to leave this episode here. Same bit as we got to in the last episode, which is getting to know the currency. So yeah, so in the next video we're going to carry on with getting to know the GBP. So thank you guys for watching, and I will see you all in the next one. Bye.